My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job, not just to entertain you, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. After today's terrific rebound, with the Dow gaining 603 points, S&P surging 2.38%, and the Nasdaq pole vaulting 3.01%. This market's keen eye for the obvious may have run its course. I'm talking about the relentless run in the reopening plays, the stocks that will thrive when America's fully vaccinated, something that's looking more and more like a spring issue now that J&J has entered the fray. Yes, Johnson & Johnson's one-stop-shop vaccine is much easier to distribute than Moderna's or Pfizer's. And CEO Alex Gorsky laid out a fabulous timetable this morning. He's talking about getting hundreds of millions of vials out there in just a few months. Well, that makes me think we're much closer to the end of this long national nightmare. So it is time to unveil the less obvious reopening plays. If only because the more in-your-face ones feel a little bit overplayed, don't they? I mean, these people running these companies, they're not dummies. This morning I saw aggressive buying in Royal Caribbean around 355 to 415. I mean, that's the cruise line that reported another weak quarter. No kidding. They gave you a great forecast for 2022. So what happened? CEO Richard Fain cleverly raises $1.5 billion in stock by selling 17 million shares at 91. Why not? Royal Caribbean's had a huge run, and they need the money. Still, it's harder to recommend these straightforward reopening plays when you know that you could get hit with an equity offering at any minute, even as you did okay if you bought on that deal, which was pretty rather amazing. It didn't go down a lot. The other obvious group is the airlines, but their balance sheets are in tatters, and I expect any one of them to issue equity at any given moment. I want no parts of them. I've been recommending Boeing and Disney, and I think they both have room to run. Boeing just got a huge order for 25 new 737 MAXs from United Airlines. By the way, that was a gigantic surprise, even though people acted like, they yawned. I mean, hey, you know what? United Airlines is anticipating a boom in air travel. I think that's smart. They know more than you. If that's the case, you want Boeing, not United, because United needs money. As for Disney, it's so obvious that I don't even want to dwell on it anymore. At least we get a pullback maybe. So tonight I'm unveiling a brand new list. This is a less in your face, but possibly more potent reopening plays, since they're all being ignored, even though they should have had a great year if we can just get back to normal by June. Now, by the way, none of these stocks is low. Okay, I'm just saying that they're not considered reopening plays. So we're going to start with one that people think is a closed economy stock, and that's not true. It's Square. This has a popular peer-to-peer payments platform, Cash App, terrific point-of-sale system that's tied into their small business lending platform. Oh, and just tonight, breaking news, they're announcing that they're opening their own bank to create a more, what they call, holistic experience. And that's gigantic news that I have to tell you, I think the analysts are going to crow about it tomorrow. Now, about 150,000 restaurants have gone under because of the pandemic. But for the first time in ages, big cities have reasonable rents. And rent was always the killer for the restaurant industry. Now, people grumble about the minimum wage or food costs, but as someone with two restaurants, trust me on this, okay? It's the rent that's the killer. With rents down and lots of people eager to go out again, I'm betting we'll see a restaurant renaissance with people eating out rather than ordering in. And that's perfect for Square. Lots more in-person transactions using their hardware, and they can also make a mint by lending money to the ones with the best prospects. And now these same people will bank with this new Square bank that I'm talking about, rather than their current bank. One piece of the puzzle. Square bought a bundle of Bitcoin at about $10,000 for their cash management. And it's now closer to $50,000. Huge home run, and they just bought more. Remember, they're actually using it as what I say it should be. You should have some cash if you're running a company, and you should have some Bitcoin. I know that only Square seems to agree with me, but I don't care. They're smart guys. Even better, Square's Cash App platform has become the easiest place to buy Bitcoin, which could be huge now that cryptocurrency has become a worldwide sensation. They got on this bandwagon all the way back in 2018. I know people are buying $1, they're buying $100 of Bitcoin, and they're all using the Square app. Maybe you should too, okay? I am pro-Bitcoin. Thousands of younger people are doing this. Second, less obvious, this is an idea that I haven't talked enough about. Ralph Lauren. Granted, this one's already on the 52-week high list, but I think it's got a lot more room to run. Ralph Lauren used this downturn to close its underperforming stores. They took advantage of the downturn while betting heavily on direct-to-consumer and digitizing its advertising. The big pivot toward TikTok, Instagram, Snapchat, and YouTube brought a whole new demo to the stores. I know the stock has run, but can you imagine how well they'll do once people feel comfortable shopping in person again? Now, think about it like this. L Brands is up 52% for the year, and they're not even fit to shine Ralph Lauren's shoes, even as RL's only up 16%. I got another one that we just have not talked enough about lately. That's Ulta Beauty. All right. This cosmetics retailer really managed to hang in there during a very difficult period. They crafted an app that shows you how you look with certain colorations, and they pivoted hard to e-commerce. But this is the year when Ulta moves into Target, a store within a store. Okay, starting with 100 locations nationwide. I am telling you this move is not in the numbers, nor is the fact that they have a tremendous partnership with Estee Lauder. One of the reasons I no longer worry about American department stores is they sell it in Ulta. If Ulta can make this much money with its business completely hampered and crippled by the pandemic, think about what they'll do when you can go to the stores and try on makeup and not worry anymore. Fourth idea, Federal Realty. Okay, this is the best shopping center real estate investment trust. Company never cut its dividend, even after a raucous conference call where they challenged the CEO, Don Wood, and everyone pretty much said, come on, come on. He would not say uncle. Wood believed that his mixed-use shopping centers could get through this difficult period. Eventually, he's going to be the last man standing in the shopping center business. It's not too late to buy Federal Realty, 4% yield, at a time when long-term treasuries are only paying half that. Finally, I'm a big fan of Ford Motor. Now, I know everyone knows there's a semiconductor shortage. I mean, everybody. Is there anyone, you walk down the street, you know about the semi shortage? And it's going to limit their production, which cuts off some of the upside. That's the bad news. The good news is, once everybody knows something, it's baked into the stock price. Why do I like Ford here? As I mentioned before, I'm predicting a small business renaissance coming out of this pandemic, thanks to pent-up demand and much lower rent for commercial properties. If we get a small business renaissance, we need pickup trucks. And the best-selling pickup in the world is Ford's F-150. Next year's going to be electrified. I'm going to get a couple of them. Just kidding, just kidding. That's hubris. In the past, this far-flung auto company couldn't seem to get out of its own way. When their U.S. sales would catch fire, they'd be dragged down by weakness in Europe or maybe Latin America. But the new Ford, the Jim Farley Ford, it no longer tolerates losing money as part of some misguided attempt at world domination. You're finally getting the opportunity to own the stock of Ford without having to worry about big charges or horrendous numbers out of some country that they had no business operating in, and that's gigantic. Think of it as the ultimate small business comeback story, the bottom line. At this point, the in-your-face reopening stocks, the cruises and the airlines, I mean, can we start swapping out of those and go into some less obvious? Go into Square, Ralph Lauren, go into Ulta Beauty, go into Federal Realty, go into Ford. These aren't exactly stealth reopening stocks. They're more like the purloined letters, hidden in plain sight. And I bet they'll seem a lot more obvious as they go higher in the next few months.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.